Okay, welcome to the weekend video. This is Enda here. It's actually Friday evening for a change, and I'm going to do, or Friday afternoon, I'm going to do the weekend video, go through what's happened this week. Quite an interesting week across the markets. Let's see what's worked, what hasn't worked, where we're going next week, all through the eyes of Elliott Wave. By the way, this is bullwaves.org. Check out the website, go to the members area, and, the join up. That's what I'm trying to spit out of my mouth. Join up, and you'll have 90 Elliott Wave analysis. Okay. Let's get into the action. All right, am I actually recording? That's a good thing to always check. Yes. All right. Here is I go to the dollar FX market first. This is euro dollar. At the moment, I'm tracking a larger change. Let's say a possible rally in a large C wave. I don't think we've had the initial bounce, but I don't think we've had the corrective higher low yet. So I am at this moment. You can see that's a 5-wave pattern higher in wave 1. And I'm tracking this second wave correction in wave 2, and I think I'm looking for a decline back towards par again before we start turning higher. Let's see, this is euro dollar. Right now, sorry, this is your continuation. This is the hourly count. Right now, I think we've got wave A done. This will be wave A of 2 at the recent low there, 105.30. The action this week has been pretty corrective. So far I'm tracking a flat correction higher. This would be 3 waves up in A, possible 3 down in B into yesterday's low. We're forming a higher low now. The action this morning hasn't been, very impressive in terms of a 5-wave pattern, but I will give a chance to see if we rally again back into wave C. If not, if we decline again, then I think we'll probably have to rethink, or I will have to rethink the idea for wave A. But for the moment, we're on track. I think we're moving higher in 3 waves in wave B. Once we break above 106.90 again, or 106.92, let's say, the wave A high, then I'll be looking for a top in wave C. And then next week, probably towards the middle next week, I'll be looking for a turn down into wave C. So we've got ABC pattern higher in wave B, and that's where I am focused right now. Okay, similar story in cable. In terms of the alternate count here, I cannot dismiss this yet. There is a possibility there's a triangle going on here in wave B. Wave B in general is what I am tracking, so that's wave B in red there, or down here, depending on which view you take. In general, I'm tracking a 3-wave pattern lower in wave B and still tracing out this C wave of wave B. So we've further downside, I think, to come to before we finish a higher low in wave B, and then I'll be looking up in wave C. So there is a substantial rally coming in cable, but I don't think we're there yet to begin that rally. If this is actually a triangle, let's expand that a bit. If wave B in red is actually a triangle, we could be talking about an A down, B up, maybe wave C down into last week's low. And then we could be still working on wave D, and then another decline in wave E. This pattern will really suit early next week if the action continues to kind of drift sideways and overlap each other, and as long as the range continues to tighten, then we'll switch that triangle B wave. But for the moment, still working on the main count. Let's see if we get a further decline. Here's the hourly count. Working on wave C down here. So we have a possible third wave decline within wave C. So we have wave 1 and 2 done. This will be wave 1, 2 of wave 3. So we're looking for a third decline in wave 3. The only way I can confirm this is if we get a substantial acceleration lower. I'd say something along the lines of what happened in wave 1 there. So, a decline back below 115 or so in wave 3 would really fit the bill here, and we'll continue then tracing a 5-wave pattern lower to complete wave C. Let's go to the 4-hour count again to complete wave C, and then definitely be looking for a low in wave C somewhere around 113, 114 area. But for the moment, still tracking wave C down. Looks like further downside with one eye on that alternate triangle count there. Okay, let's go to the hourly. This is a 4-hour count in dollar yen. The rally continues. I cannot, even though I did have misgivings earlier on last week, the third wave pattern continued higher, just like the count had suggested, and maybe I should just trust the count a little bit more. So at this point, because we've broken above the previous wave 4 high at 134.75, I think we can be pretty sure. I think we can be pretty sure that wave 4 is now done and wave 5 is underway. I mean, this is the wave A low here at 137.65. If we break above the wave A low, that again will add kind of a probability factor, an increased probability factor to this bullish wave count. Let's get the hour. Let us get to the hourly count. I'm tripping over my tongue here. In general, I'm tracking a 5-wave pattern higher in wave 1, and you'll see that on the hourly count. Okay. Now, here is wave 1 and wave 2. There's a couple of ways you can count that. We could count it as a failed C wave within a wave 2, so we could bring wave 2 over here. I think that gets a little bit complicated, but still, nonetheless, a possibility. At the moment, I'm going with the series of higher lows in 1, 2, 1, 2, and then last week was a nice spike higher in wave 1, clear through wave decline wave 2. That was bullish higher low, and then we extended the rally into wave 3. At the moment, we're kind of consolidating this rally in wave 4. So this will be wave 4 of wave 3. And then I think next week, once we find a low in wave 4, I'm looking a minimum. I'm looking for a break of 135.22 or 135.25 with a possible target down around the previous 4th wave low at about 133.90, 134. So 134 for wave 4 to complete, and then a turn higher into wave 5. So ongoing third wave, which should again, we should see another, let's say, a spike back above 139 or back towards 139 to complete wave 3, and then further consolidations in wave 4, another spike in wave 5. So it's going to be a series of steps higher. I don't think we'll have any kind of runaway rally coming anytime soon. It's a series of 4th waves, so the action is probably going to get a little bogged down. Once we finish wave 3, the action is going to get pretty bogged down in wave 4. So it's going to be probably a test of patience as we complete wave 3 and enter into wave 4. But anyway, for the moment, looking at this lower degree wave 4 in pink here, let's see if we can get that out of the way next week early, and then move higher into wave 5. Okay, the stock market Dow is moving along quite well along this bearish wave count. So you can see here we have a second wave lower high complete at 34,940, 34,900, whatever it was. That came in at the top middle of December last year. So interesting. We're already in March, a quarter of the way through the year, and I'm still only used to writing down. I'm still only getting used to writing down 2023. Okay, so we have a possible second wave lower high, and then immediately into Christmas we declined impulsively, and then over the last 2 months, basically just moved sideways to form a corrective lower high again. So all that action, 2 months almost of sideways to nowhere, and then we've moved impulsively lower again. So it's looking like a pretty solid 1-2 pattern in blue. And I'd be looking for, I have been pointing towards a possible beginning of a third wave down into wave one. This would be wave one of three, so a 5-wave pattern lower into wave one of three. So we've got the initial move lower in wave three, and I'm looking for a lower high now in wave two. You'll see that I know I'm bouncing between threes here, so it's probably getting a little bit confusing. For the to shorten it up, suffice to say, we've got a 1-2 lower high and complete. Now we're looking at this third wave developing down. Okay, so here's the hourly count. 5-wave pattern lower into wave one. I think we've got an expanded flat correction going on here in wave two. We're almost up. We have been looking at that wave A high over the last few days. So the pattern has run quite well this week. Again, sideways corrective to the upside. I'm not sure if we've topped out. Maybe we have even topped out as the market opens this morning. I'm looking for kind of probably a break above 33,200 to complete wave two. That would bring us up to that 38% retracement as well. So that'd be pretty clean top to work with. I have been pointing people on the website to that area between the previous wave A high and the 50% retracement. So between 33,200 and 33,490, let's say. That gives us a kind of a target area for wave two to complete, and then we'd look for a decline into wave three. So I'm not sure. I don't think we'll get the decline into wave three beginning today. Maybe I'm not before the end of the day. Maybe we'll see. But I would be looking towards early next week, Monday or Tuesday, before we get the initial move down to begin wave. This will be wave three of three. So if this count is correct, it should be a pretty solid acceleration lower, probably back towards the 30,000 handle again, 3,500 maybe or something like that. Okay, but for the moment we've got a 1-2 pattern building, bearish lower high. Let's see if we get an acceleration into wave three of one next. Wave three of three of one next week, and that's the outlook. It's for the moment it's it's pretty bearish in the short term. We'll probably consolidate lower before all out collapse happens, but that's coming too eventually. Join the website and then you'll find out. Okay, move on. There's my sales pitch thrown in the middle. Here is gold, 4-hour count in gold. Let me get a drink. I'm drinking a lot of vitamin C these days. You can probably hear it in my voice. I've dropped an octave last week, so I don't know if it sounds ASMR or hard to comprehend. One or the other. Okay. This is the bullish count in gold. All right. We're working with a bearish count in the stock market. We're working with a bullish count in gold, but we are not there yet. We've got a rally this week, small, but a rally nonetheless. And we should be seeing a bullish higher low build over the next few weeks. We've got, I think for the moment, we've got wave A of 2 done, and we're working on wave B. The internal pattern of wave A is probably up for grabs, I suppose, but it looks pretty corrective over the last week or so. I'm looking for this wave B to close out and then wave C to come in. Ideally, I am looking at a low for wave 2, possibly even with a break of 1700. That would be a pretty substantial decline. We'd be back between the 62% and 78.6 retracement levels. But I think that would be enough to, let's say, wring out any over bullish type of rhetoric that was going on in this initial rally. Now, granted, or we have to understand or to take into account that this wave one rally was happening over the last 3 or 4 months, or the last few months of 2022, and the constant reverberation in the media was inflation, 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 inflation. Every single day, the backdrop was inflation and runaway inflation, and oh my word, isn't this inflation? So we had a pretty, a substantial rally in gold against that backdrop, and now we've got disinflation, and we've got, even, dare I say it, the beginnings of deflation, because we've got, debt destruction happening, and that is the essence of deflation, is debt destruction. We've got defaults on car loans, we've got defaults on mortgages, we've got defaults on car loans rising, defaults on mortgages rising, defaults on commercial real estate rising. So debt is being destroyed, and add to the backdrop of that, the Fed is actually, you know, um, destroying debt as well, because it's buying back, or sorry, it's selling, it's destroying currency. Let's say it's selling bonds into the market, thereby destroying purchasing power, replacing cash with um, bonds. So we've got a double whammy of disinflation factors here now, and I know for a fact that the Fed wants to crush inflation, and they don't care if they crush the economy while doing it, because just remember, the Fed's number one job is not the market. The Fed's number one job is to keep the government spigot, the government money flowing. And a rip roaring recession will actually favor the government. It'll favor the US government. They don't care if the economy goes into recession, because they can spend like a drunken sailor then, and the Fed will open the spigot to them completely, and it'll still have deflation. They can spend like a drunken sailor and still have deflation in prices, because private debt is much bigger, and it will be deflating. It will be the market will be chewing up these government bonds, no doubt about it. And in fact, not a bad idea right now to start buying, even longer dated government bonds. The rates you're getting right now, 5% on, what is it? 5% on 2 or 5 year notes, was it? Yeah, 5 year treasury. Sorry, that's not a bad deal, especially when you think of, well, my market outlook for the next 5 years, is catastrophic. So you ain't going to get 5% return in the stock market. Now I'm talking about gold. Get back to gold. All right. So the inflation rhetoric that surrounded the rally has now turned to disinflation and, dare I say, even debt destruction. And I think we will consolidate at a lower price point here in wave two. I think we'll come in. We may even break 1700. If I'm wrong on that, that's fair enough. I'm a bull long term, but I'd like to see this three wave pattern decline or close out before that happens. You can see we've got pretty good wave A pattern done, 3 waves down, wave A, correction wave B, and then an ending diagonal wave C into that 1800 low. I think we're moving higher in 3 waves. Whether we've completed 3 waves or not, I'm not sure, but we were looking for a rally in wave B. We've got that rally. I was kind of eyeing between 1850 and 1860 for wave B to top out. It looks like right now we've hit the previous fourth wave high, so maybe that'll be enough to stop it. Maybe that'll be enough to stop wave B. In that scenario, we'll see how the trade goes today. But if we fall back below 1800 again, that'll kind of indicate that wave C is underway, which will indicate that we have a lot of work to the downside to do yet. You could view this internal pattern a little bit differently. I'll save that for tonight's update, actually, for an alternate count on gold. But let's see how today's action goes. I think we will unfold next week into a C wave decline. But anyway, each day as it comes. We'll see how it goes. Okay. Right. Crude oil. Yeah, it's been an interesting week at crude oil. I'm not sure that my bearish alternate count here is wrong. You could say, I know I'm kind of stepping carefully into this, but well, first of all, there's a few counts ongoing here. We could still have this ABC pattern higher in wave 2 underway. So we could still see a rally back towards $85 again. And we will see how that goes. Now, if that is the case, we should be seeing more impulsive action off this low here. And if that's the case, then what's happened this week is not in line with an impulsive rally in wave C. Now, there is an alternate count. Don't blow your britches. Last night I was talking about if we got an acceleration lower, then this alternate count would probably take the lead. And I think today, maybe we're shifting towards that alternate count now. Cannot get completely sold on this yet either. I mean, I'm going to reiterate the C wave pattern, the C wave rally can still, can still revive. We can still rally next week. I'm not, the pattern might be a little bit different, but it's still a possibility that we get a 5-wave rally higher in wave C. Now, internal pattern here will also change, but the fact that we've had pretty corrective looking action to the upside this week really kind of refocused my attention onto this alternate count over the last couple of nights. So, a possible C wave rally, a possible ending diagonal, a possible wave 2 now in place at this high. So let's see. In order for this to, let's say, in order for this bearish count to reassert itself, we really need to see some kind of follow through to the downside and a break of that wave 2 low there. So that'll be 73.85. If we get a break of 73.85, I'm probably going to go all in on the bearish side. I think I will flip to that alternate count, the bearish alternate count, and we could be looking for a third decline pretty soon. And if the stock market goes, I think crude will go also. Okay, let's get on the S&P. Now, we've got a 3-wave rally in wave 2 and a 3-wave rally in wave 2. I've got kids fighting outside. Anyway, 3 waves up in wave 2 and then an impulsive turn lower. Now, this week, I've been looking for this impulsive decline to begin over the last few weeks, and this week seems to have kind of reinforced that idea. Now we've got just like the Dow, we've got a corrective kind of consolidation at a lower high building. So I think we are stepping down into wave 1 of 3 now. So I've given the hourly count here. You can see I was a little bit hesitant about this failed 5th wave idea, but it seems to have come through or pulled through at this point. We do have 5 waves down into wave 1. We had not quite a complete retracement of, well, nowhere near a complete retracement of the previous wave B. So this is the wave B low came in at 37.63. We're going to have to see a slice through that low to confirm this wave count. But we do have a solid candidate for a 1-2 pattern now building, a lower high now forming in wave 2. And once we do get that lower high, then I think we're going to get pretty exciting to the downside here in the S&P pretty soon. So let's see how this wave 2 unfolds today. If we top it out, wave 2 today with a break of 40.20, that's kind of what I've been looking for over the last few days, rally back up to about 40.20 to close out wave C of 2, maybe a bit higher, might go 40.50. We'll see how it closes out. But definitely the formation of a lower high below, I should pull that down, below that 41.70 wave 2 high. And then next week, I will be looking for a pretty solid acceleration lower into wave 3. And then, God knows where we go from there. So if you're a bull, you'd be crossing all fingers and toes right now to make sure that this pattern doesn't actually materialize. Okay, let's move on. This is silver. Uh, Still kind of tentatively looking towards that final low in wave C of 2, somewhere down around somewhere between $18 and $19. Um, the final count for wave C of 2 is a little bit up in the air at the moment. Let's say the internal pattern is just not it hasn't revealed itself just yet. That's probably the best way to put it. But we do have a series of, let's say there's a pretty serious consolidation back between $18 and $19 way back last September, October. That consolidation is uh, probably going to attract a wave 2 decline. Second waves are usually quite deep, not always, but usually quite deep. So far, we've retraced 62% of the previous rally. But let's see. I would like to see another move down to complete wave C. I suppose that's probably what I'm trying to get at. The internal pattern here for wave C of 2 has morphed this week. We could be talking about an ending diagonal. Maybe this is the wave 3 low, and maybe this is the wave 4 high, and now we're moving lower into wave 5. If we do slice back below 20 and we fall back towards 1950 or something like that, then I think we'll probably have enough done to begin looking at a serious low for wave 2 in silver. And wave 3 up, could double prices pretty quickly, in the period of a few months. So watch out. I think there's a pretty solid low coming in silver pretty soon, but I think it's down around, well, it's between $18 and $19, I think. That's where that low will come in. Okay. Bitcoin. Is there any point in talking about Bitcoin? Right. Well, yeah, maybe we will. A wave 4 high is what I've been looking at this week. You can see we've got a solid 3-wave decline back into the last summer's lows, and then we've basically drifted sideways, double topped last week, about 25,000. I think that was an expanded flat correction in wave 4. So a long, drawn out maneuver to nowhere, basically, in wave 4. It did invalidate the previous count, but I think enough has happened over the last few weeks to suggest that we are actually topping out again in wave 4, and we'll move down into wave 5. And if that is the count, if that is actually correct, then I think wave 5 will bring us back towards definitely below 10,000, maybe even below 5,000, and maybe even below 3,000. If wave 5 equals the extent of the decline in wave 1, then we're talking about a pretty serious final low for wave 5. I'm talking back below 1,000 again. This would be enough to completely wipe out any sort of crypto resurgence or crypto sub economy or any sort of talk like that. 2 years ago, cryptocurrency was going to change everything. It's going to change the economy. It's going to change medicine. It's going to change banking and finance, and it's going to change everything. There was like crypto was going to give us a cure for cancer. I'm sorry, it ain't. It's a trading device right now. That's what people are using it for, and I think there's a further downside to come. Go to the 4-hour count here. You can see that's the 4th wave top. If it is a 4th wave top, that's where it came in. And a 5th wave decline is coming our way. So that was wave A up into August last year, 3 waves down into wave B, and then 1, 2, 3, 4, 5 into the February highs of wave C of 4. And now we seem to be pointing lower to begin a decline again, a pretty serious longer term decline into wave 5. So if that's the case, well, then maybe we're looking at a 1-2 and a third wave decline this week. Yesterday's action might speak quite well to that idea. I've been looking at this, looking at this gap that happened, mid-January there. That comes in at about 19,500. The initial decline, if we broke back below that gap, then I think that would probably do enough to turn the tide on any rally in Bitcoin and open up that fifth wave decline. I think that'll probably where my eye is at now. Anyway, let's go to the NASDAQ for a few minutes. Right, we managed in the previous three-wave rally, ABC rally up in wave 2, we managed to top out just below the 78.6 retracement of wave 1. Now that was a pretty solid three-wave correction, flat correction, 3 up in A, 3 down in B, and then 1, 2, 3, 4, 5 up in wave C of 2. And now we're turning lower again with a possibility of a 5-wave decline building. Okay, so that pattern, I haven't kind of, let's say, committed to a wave count off the top there yet, but we're probably pretty much in line with what's happening with the S&P. Maybe that's a failed fifth wave idea also, but we'll see. We'll see how it develops. Looks like we've got some sort of flat correction going on here, so this could be a third and a fourth, and maybe we move lower again into wave 5 of 1. So far, I think the wider market, the wider risk asset market is turning lower. The wider stock market seems to be turning lower. There's no reason why the NASDAQ doesn't follow that to the downside. Okay, I think that's that. Check out bullheads.org. I hope you found that interesting. I look at things from a pretty technical and Elliott wave perspective. If you're interested in nightly updates, check out bullheads.org. Apart from that, to those of you who hang on, you all know by now that I give you the bad news in the markets, but the good news of eternal salvation. It doesn't really matter, how successful you are in this life. If you're not successful in terms of surviving into or making it into the kingdom of God, then it doesn't matter how much money you have. You can't carry that money to hell, man. That's for sure. And some people might say, well, how defeated or how exclusive is that? What sort of a God have you got that throws people into hell for not believing in him? Well, you can decide. You've got free will. You can decide whether you want to worship the God of creation or to not have anything to do with the God of creation. And the problem is, everything good comes from God, and everything bad is absent of God. So that place we like to call hell is absent of God, and that's why it's such a horrendous place. So you don't want to go there. And if you deny God in this world, he'll deny you in the next. If you deny Jesus in this world, he'll deny you in the next. So if you want salvation in the Hebrew is the name Yeshua, the word Yeshua, which is salvation. So Jesus is salvation. Believe in the Lord Jesus. I'm not giving you religion. It's a relationship. You believe that he died for you, paid for your sin. He paid for your sin debt. God won't hold that sin against you if you believe on the Lord Jesus and what he did for you. So that is that. That's the good news, the message of salvation. Something big is coming in your life, and that's going to force you to think about it. If you haven't had it yet, it's coming. I've had it. Anyone with an ounce of sense out there knows that it is only a matter of time before you really have to search your soul and to search for God and to reach out. As St. Paul said, like to grope in the darkness for God. And if you do, God is there for you. You have to reach out the hand. You've got free will, and it's you that has to make, it's you that has to submit yourself to the King. He is the creator of all. So you have to acknowledge that. I'm afraid we're the one that are insufficient. That's one of the names for God. It's El Shaddai, the sufficient one. So I would implore you to come to the Lord Jesus, and I'll see you in heaven. By the way, did you know that the probability of any two card shuffles being the same across all of human history, a normal set of playing cards, the probability of any two set of playing cards being identical, or shuffles being identical, is 1 in 80 and 66 zeros. That's, I can't even pronounce the name they give to that. It's something like nanoquadrillion or something. 1 in 80 and 66 zeros after that. So it's nigh on impossible that any two shuffles that has ever been done by a human of a deck of playing cards has ever been the same. How much more impossible do you think it is that all of creation popped out of nothingness and ordered itself into what we have around us? And you, with fingers and toes and a mind that thinks, and a tongue that speaks, and the blood vessels that travel around your whole body and carry oxygen, and oxygen that's in the air just at the right percentages for us to breathe, and a night and a day with a circadian rhythm that actually, helps your body to recover. How much more impossible is it that that is by chance? And that's what I'll leave it to you. The truth is, it was all created, and you have to acknowledge that. Until next week, if I'm still here, if I'm not, I'll see you in heaven. Bye bye.